Hello and welcome to Business Today Television. I'm Siddharth Zarabi and joining me now is Chief Economic Advisor Dr. V. Anantha Nageswaran, who's going to talk to us about the key highlights of the economic survey for 2023-24. Thank you very much, Dr. Nageswaran. I'm going to come straight to the point. The growth projection, would you agree with some people who are saying that it's a little excessively conservative?
Look, in February, when I made the Indian economy a review, which accompanied the interim budget, I was much more relaxed and comfortable about the 7% projection. And even now, we are not saying 7% is out of the realm of possibility. We think it's possible, but we are taking into account some of the developments at the margin, which is that the monsoon distribution has been patchy, uneven, and geopolitical climate has worsened, and financial markets risks have become more elevated, etc. Some of you might have seen the latest cover story in the Economist magazine as well, etc. So I think at the margin, we are simply taking into account some of the headwinds that have developed and are trying to be prudent rather than cautious. We are optimistic. We made it very clear. We are very upbeat about the Indian economy's prospects. But there are external factors beyond our control, which when they happen or when we see a higher likelihood of happening, we just need to take cognizance of that, and that is what we are doing.
Dr. Nageswaran, there's a complete chapter on prices and inflation, and the title there is Under Control. Is it likely to stay under control for the foreseeable future? Can you give us a overview of how you read the inflation situation?
No, on a headline basis, I think inflation is well behaved. Yes, there are specific commodities in food area, etc., which have seen elevated inflation. But I think the impact of food in the overall CPI basket has also been coming down. And therefore, RBI, the central bank's projection of inflation slowly making its progress towards the 4% mark, I think we are on track.
Dr. Nageswaran, in terms of monetary management, and you also spoke about that in your first answer, we have over the recent past heard some amount of commentary from the regulators on market F&O derivatives. The survey also has put out a very stark comment on that. Please expand on that. Why are you saying this, and do you think it's a systemic concern at this stage?
No, it is not a systemic concern, but the important point is we don't want it to become a systemic concern. Right now, it is not a systemic concern at all in terms of the magnitudes and the sums involved and the number of people involved, etc. But it is important not to let it become one. And that is why we are voicing these concerns. And also from the point of view of aiding capital formation in the economy, if households end up losing unnecessary money in trading futures and options, which historically across the world have turned out to be not so profitable for individual investors in these financial products, then it affects their own savings, their spending power, and therefore their sentiment, which has a knock-on effect on corporate sectors, investment plans and production plans, etc. So it is important that we understand the macro linkages in this. And that is why before they become a systemic concern, it's important to make sure that it doesn't become one. And that is the reason why I've been saying that we are all for encouraging India's retail participation in the capital markets. But more importantly, it should be in products that help both the savers realize their return goals and also provide capital for productive purposes.
Is the time right for any sort of regulatory intervention in this regard?
I would prefer not to go into that area because the regulator has, I believe, appointed some sort of a working group or committee to look into it, and based on the recommendations, they will choose the appropriate course of action.
Dr. Nageswaran, the survey makes the point that the banking and financial sector had a stellar performance in FY24. Is that going to continue because deposit growth is under a bit of pressure?
No, I'm not exactly into predicting the performance of different sectors in the economy, their profitability, prospects, etc. But in general, as long as the economy continues to grow nominally at 10% or more, many sectors will continue to perform well and see their profitability grow either in line with or even better than nominal GDP growth.
The impact of the global situation going to be as far as our inflation trajectory is concerned, sir?
At the moment, we don't see any threat, but it's always possible that supply disruptions can occur, which could temporarily impact inflation trajectory coming down steadily. But at this point, we don't see it as a major risk.
Chapter 5 makes a very interesting observation. Going forward, the government's focus must turn to bottom-up reform and strengthening the plumbing of governance so that structural reforms yield strong, sustainable, balanced, inclusive growth. Would you care to expand on what kind of bottom-up reform?
We have expanded on that in the presentation as well. We simply said that it is not just union government, it is governments at all levels, union, state, and local. And we said that in the presentation as well, deregulation and the buzzword for reforms going forward is grunt word, looking into the plumbing of the economy. And we gave some illustrative areas as well in terms of where we should deregulate. And that is what we have explained thoroughly, in the sense that it is easy to arrive at a consensus on boosting female labor force participation, on supporting MSMEs, on turning agriculture into engine of growth, etc. But then, what are the specific actions that need to be taken? And that is where we have gone into in detail in Chapter 5.
Dr. Nageswaran, some economists commenting on the survey have said that in their reading, you have signaled the need for a rethink of the inflation targeting framework. Are they correct in their reading?
I have raised an important issue here because sometimes in the name of controlling inflation, especially if food prices remain elevated, some of the actions that we take in order to control food price inflation do not allow for substitution effect on the part of the consumers to play their part. And we may be also distorting consumption patterns, which are detrimental to the health of the consumers themselves and also affecting the evolution of farmers' incomes. So it is an issue that needs to be debated.
I want you to comment about Chapter 8, labor market, where you make this pointed observation that the unemployment rate has declined to 3.2%.
This is based on the periodic labor force survey estimate.
Okay, so the survey also makes this point about net payroll additions doubling. How confident are you that this is going to continue in the future?
No, I think basically India's employment, I mentioned it in the preface as well. India's employment generation has not been structurally impeded. It was affected by the balance sheet crisis in the corporate and the banking sector, and it was also affected subsequently by pandemic-related disruptions. Now that the balance sheets are in very healthy shape and the COVID-related disturbances have faded away, I think the structural dynamics will generate the kind of jobs that we are beginning to see happen in the last 2-3 years. That is why I remain confident that Indian economy, and you're seeing that in the growth in the EPFO net subscribers, you are seeing it in the demand on staffing federation, you are also seeing it in the growth of employment in the factories sector, which I also mentioned in the presentation. So all these things are signs that the labor market is intrinsically healthy, and we are also indicated several areas where further actions on the part of governments, not just singular governments at all levels, can actually boost employment both with respect to males and females.
Thank you, Dr. Nageswaran, for your time with us today. With that, it's a wrap with the Chief Economic Advisor ahead of the budget. All action and eyes now shift to Nirmala Sitharaman's 7th budget presentation that is scheduled for just tomorrow at 11 a.m. We'll see you again. Until then, goodbye.